Well, yesterday I showed you some fundamental changes in the order book, and today we have even more developments we need to talk about. Good morning, guys. It's Keith Allen, and as you can see, Bitcoin is breaking down into a ladder of bid liquidity, and it now has a secondary ladder coming in here in the 58 to 62K range. We have talked about these levels for weeks and weeks and weeks, and we're going to go ahead and look at the candle chart and break this down a little bit for you. Do you remember last week I drew this octagon? It represented the MMA match I was looking at between the Bulls and the Bears as we were approaching the monthly close. Not pure technical analysis here on these angles, but some correlation, okay? This was the monthly close right here. We had a pseudo breakout attempt. If this was really technical analysis, then this line would be more like, I don't know, something like this. Either way, close enough to the pin, and you see what happened, right? We got a trend precognition down signal on the daily. We also actually, on the monthly close, had some signals on the. Well, I'm way zoomed out here. Let me tighten up a little bit for you. We did get an A1 signal, tentative, of course, until this candle closes, but we already see this playing out. This would represent the fact that price not expected to go higher than the current all-time high this month. This could certainly invalidate, but we've got lots of time ahead of us, and of course, the halving coming up here in a few weeks. Again, on the weekly, we also, a weaker signal, mind you, but we do have a signal developing here, also tentative, of course, but again, this looks valid. This indicates that price would not, if this prints valid, it would indicate the price not expected to go higher than last week's high, around 71,750 or so. On to what's happening in front of us. We see that we still have momentum softening. We got the signals that kind of indicated that we would see a lack of momentum losing here. The orange A1 slope line here says still a weakening of upward momentum, and or strengthening of downward, if you will, whatever you like. And we're in this range of interest, right? So the key levels that we marked here are still very valid, even though we're beyond the monthly close, obviously, right? So we're seeing this breakdown, and so now you have to wonder, what is the last line of defense, right? How far is this going to go? So the next level for me would be to look at this 50-day moving average, and if we look at some history here, we've been up since we broke out of this 40 to 45K range. We haven't been below that. We haven't even tested that 50-day moving average, and that's something that is not lost on me. We had just an amazing ascent from this level without ever retesting it, and so I've been wanting that for a long time, but the market doesn't care what I want, right? So I'm playing what's in front of me, and what's in front of me right now is that we ripped through this without any retest. We ripped through this with one retest. We could argue whether or not this was a retest or not. Sure, I'll give it to you. But it looks like we're headed there again right now. So where could we go? We have obviously this potential landing zone at the 50-day moving average, which is right above the 62K level. And we have this. This is the critical zone. We had this red range, 58 to 60, right? Again, another area that we ripped through without any friction. We had friction that, there's some history there because it existed. Let me clear out the trend precognition, okay? Let me clean up the chart. I know it's busy. There's a lot going on. We had some history up at this level, right? But this time around, we ripped through it really, really quickly with relative ease. And so now I'm looking at this 50-day moving average as a potential landing zone on a retest. And if that doesn't hold, we look to this lower low, 59K. And, this is the 59.3 is where it's sitting for me on this chart. Might be a little bit different on your chart with whatever exchange you're on. But this really, in my opinion, is the last line of defense. If we lose this, then we have a chance to go test this 50 to 52K range. And if we lose that, guess where we go? Boom, right here into the sweet spot. in terms of what that would look like in terms of a correction before the halving right here around April 19th. This move that we're on right now would be a perfect, if we could make it to this level, if we could make it to that lower low without breaking it, that would be a 20% correction, okay? And so if we lose that level, then I'm looking to the next technicals, right? We're in a 28-30% range here around this 52K level. And if we broke down further, then we have, look at this, confluence with the 200-day moving average and that 44K level I've been looking at, and that would represent a 40% correction. At the moment, we're not seeing a ton, really any liquidity down in that range to make us think that that there's sentiment for that yet. But, and this is the caveat. Look, hey, let me zoom in on this so I can illustrate it for you. I want you to be able to see what's here. Currently, this looks like zero sentiment for that level at the moment, but we are seeing things change a little bit. Now, if you recall, I have shown you guys several times what the battle looks like between the different sides of the market in terms of order book liquidity. The bright spots tend to win the battle, okay? Now, at this point, we have almost equal amounts of liquidity to the upside as we do to the downside, maybe even a little bit more laddered down to the downside. But the concentrations are the hardest walls to break. Okay, so this is thinned out considerably. This was over 200 million a week ago, and now it's down. As you can see, it faded out a little bit here, and it faded out here, and here, and here. And so this is now probably closer to the $150 million range. And this down here is probably closer to the, $180, $200 million range, laddered all the way down. What you want to see in terms of where a bounce would come from is a big bright spot, like so. That would suggest that there's heavy buy sentiment stacked at that level. And if not sentiment, just, a manipulator placing it there. Doesn't matter how it gets there. What matters is we need it to appear. And so we have at the moment some higher concentrations, about 34 million here at the 65K level. And then as we get down into that 62 range, 60 to 62 range, those are also in the $33-35 million level in terms of, the size of those walls. So, and as you can see, sentiment, I say frequently, nothing changes sentiment like price, okay? And as price gets lower, we see bids coming lower and lower. And that could certainly continue down into this range. A little bit hard to see here on this chart. Let me see if it looks better here on this chart. So this really is a bit, much more granular in terms of what we saw, after the monthly close. We did see price start to drop. This ladder came in here, extended it all the way down. This was about 150 million. And then, of course, this morning, I woke up into this new ladder here, quite significant. And as you can see in the background, and I'll push the contrast here a little bit for you, you can see we now have also some liquidity coming into this range. Some of this, let's see, did it move? Some of this may have moved up into here. And perhaps even further down. Let's see. No, at the moment, it seems like it's moved up into this range. So 58 to 60 looks like what is the strongest concentration of bid liquidity at this point. 58 to 62, to be honest. Heavy doses of liquidity at 60, trying to protect that lower low, right? This one right here. Well, these are actually... a line chart closes, shows you on the close, so it's not going to show us wicks, but we did have obviously that wick down here to the 59K level here early in March. So the lower low is what is the critical line that needs to be defended. Otherwise, we're going to have to evaluate the probabilities of targets down in this range. And if we do break through this, then I'm looking at 50 to 52. And then I'm looking to 44, 45 levels. That pretty much sums it up for the day, right? We've got the halving coming up. So, I told you that I've laddered my way down. Timing these moves is really, really tough. Identifying potential targets is much easier. So I've laddered myself down. into these different ranges of interest. And, I'm hoping that things play out as expected. When it's all said and done, I do think that after the halving, and it could take months for us to get there, but I do think that we will eventually clear this all-time high and start printing new all-time highs. And that's why I'm okay holding on to the positions that I've bought here in the past week. Sure, they're in the red at the moment, but I do think that they'll recover. And I've been playing the game of trying to optimize my entry, and it's really, really tough. So I've smaller positions up here, larger positions down this way, and that's how I personally play the game in terms of upside. As I've said several times, we have to start consolidating above this level. We've obviously lost the 2021 top at 69K, so maybe this is the consolidation range that we get here, and that would be fine, right? The fact that we didn't go retest this level is certainly something that I am tuned into, but I would be fine if this became the level that we retested and then worked our way up and then eventually start printing candles above this 2021 top. And I told you, as it was happening, that there was weakness here because of all of the failed attempts, right? We tried and failed, tried and failed, tried and failed, tried and failed. Broke above, but had a wick below. Wick below. One candle of strength with no wicks below. Wick below is weakness. Here comes the breakdown, fail. I don't know how many times I could tell you. You got to see full candle bodies above these areas of resistance to validate an RS flip, and we just have not seen it here. So we haven't validated one here at this level either. So we do have a nice test here. We'll see what happens if price continues to break down further. And that's pretty much the long and short of it. Nothing I say here, of course, could be considered trading advice of any way, shape, or form. We're all looking forward to the day when price breaks back above the all-time high and starts to work its way up towards this channel and hopefully eventually into that channel. But until then, we look at our opportunities in front of us, we manage our risk, and we manage our capital so that we do have capital available should we get these deeper corrections. Just be prepared. I'm not saying it's going to happen. I'm just saying be prepared in case it does. Simple as that. Hope that gives you insight to help you trade smarter. That's what it's all about here, right? We all want to become the smart money. All that doesn't take millions to do that. It takes making smart decisions to do that. So hope this helps you out. If you like the content, please do me a favor. Smash all the buttons. Share a comment. I love the comments, and I engage with each and every one of them, and your engagement helps me grow the channel, and I appreciate that immensely, and I really appreciate the feedback that you guys have given me. If you've got some suggestions, some ideas, some things that you would like to see, maybe different time frames, maybe different indicators, maybe different coins, by all means, chime in. I'm open to ideas and want to make this a valuable place for you guys to come and get some insight to help you with your navigate this market and these kinds of conditions. That's it for me, guys. I got a live stream coming up here in a couple hours. I hope you'll tune into that. I will drop the link before we start. You'll see that on the channel as well. And looking forward to a fantastic day. Make it a great day. And as always, trade safe, my friends.